We have recently seen that natural gas topped out here, and that obviously marked the beginning of this massive sell-off that we've seen following. That coincided to volume delta spiking to the downside, and we've also seen that structural invalidation here at the RSI moving average. And so whether this is actually about to end in a structural downward trend in a deeper recession here at natural gas, that is a question that we can only answer by taking a look at the past few cycles to learn from them. Because obviously that could also be just a small corrective movement that we do see reverse at the bottom band of this yellow channel here again to the upside. And so we really have to understand those past few cycles that we've seen here at natural gas. And so let's have a look at the weekly chart and some ratios between some metals here. And you do see that those last few massive crashes that we've seen happening to natural gas actually always coincided to the same things happening to those ratios. Whenever you do see that natural gas tops out and starts those big bear markets here, you do see that the gold to oil ratio actually starts to pick up. We've seen that happen several times in the last few decades. We've seen always those deeper bear markets here at natural gas actually coincide to this ratio picking up. And in fact, we are currently seeing exactly that happening for quite a while now. And obviously, that makes a lot of sense. Whenever you do see that oil and gold do behave in exactly that behavior, that you see that gold is actually outperforming oil, or in other words, that this ratio is picking up, that obviously suggests that you have this risk off sentiment, that flight to safety, because gold is strengthening stronger or harder than the oil prices. And so this is really one of the most important indicators to actually take a look at, because when this is rising, that is really giving you a lot of concerns because of the future. And you have seen that actually marking a lot of downturns here at natural gas. Let's have a look at the gold to silver ratio. You have seen quite similar things. You have also seen that actually marking those tops here at natural gas. Obviously, that is quite similar. You do see that gold is outperforming silver in times of economic distress. Whenever you do see big recessions happening, you do see, for example, here in 2020, this ratio to pick up. Gold is strengthening harder than silver. Now let's have a look at the copper to gold ratio. This is quite similar but inverse, since we do have gold on the right now. Obviously here at this point you do also see gold strengthening harder than the copper price. You do see that gold is outperforming copper. And now what is really interesting about this ratio is that you tend to see a divergence happening before the crash is happening. Here, for example, in 28, before the great financial crisis, we have seen that natural gas has continued to rally here until we've seen the crash happening. And coinciding to that, we have actually already seen that this ratio showed some weakness. We have actually seen the beginning of consolidation, maybe even a downward trend here, that actually shows you the underlying weaknesses of the economy, because obviously copper is a industrial metal. When the demand for copper is actually decreasing, and therefore when the price of copper is decreasing, that is showing you that there might be underlying problems in the economy due to the fact that you do see the copper price actually starting to weaken, and vice versa. You do obviously have gold strengthening, and that is gradually showing this ratio that we are seeing here, and that is also a signal that really should be something you take a look at. And in fact, if you have a look at what we are currently seeing here at natural gas, you have seen a reversal here at the gold to silver ratio, exactly as we've seen two previous cycles before those crashes happened. We are also seeing that long structural upward trend here at the gold to oil ratio, and we are seeing that divergence between the natural gas price, where we have seen a bullish trend in the last few months and years, and we are seeing that bearish trend, that downward trend at the copper to gold ratio. And so we're currently seeing that those three indicators, those three metal ratios, do really show you a lot of signals that we could see a deeper structural downturn happen here for natural gas. And so in fact we could see that this is about to end in a bearish breakout through the downward band of this yellow channel, we might see this actually end in a deeper corrective movement here, and a deeper a sell-off happening to natural gas. And in fact, we've actually told you that in one of our tweets the last few times. And obviously that is quite obvious. We are currently seeing that history repeats. We do have those economic cycles. And by the way, if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel so you don't miss future videos, and also support us for work here on YouTube. And if you have any questions, by the way, also make sure to comment them down below. But to actually conclude to this video, to actually really bring it to the point, we have seen that history is repeating. We have seen that those cycles are always repeating here. Those lows are always happening here at natural gas. And we might just see that this is not actually a low here, that we might see a lower low happening in the next few weeks and months and years. Obviously, we do believe, and if you know our latest videos, we have actually talked about this deflationary crash happening for quite a while now. But at the same time, you have to obviously take a look at the dollar, because natural gas is priced in dollars. When you do see that deflationary crash happening, that would suggest that you do actually see natural gas sell-off here, that you do see that massive crash happening to natural gas. Also coinciding to that, you do see the dollar rise. Now at this point in time, we do have this situation here at the dollar, which is quite serious. Whenever you do see those big economic downturns, you have actually seen that that actually coincided to those massive upwards trend here at the dollar. For example, here in 2008, you have seen that massive upward trend happening while we've seen that massive crash here happening to natural gas. We have seen that several times, actually coinciding to those crashes that we've have seen happening. And also here in 2020, we've seen that pick up. Now, obviously, that is what ultimately shows you that we do have a deflationary crash happening here to crude oil. And so you do have this cause and effect relationship between the dollar and natural gas. Now, we have seen that big trend here at the dollar. We have seen it weaken for quite a while now, which actually marked or actually fueled this massive bull run here at natural gas. But obviously, if you do see that credit is actually about to contract, that the money supply is about to contract, a reversal here at the money supply would obviously conclude that we do see that the dollar is continuously strengthening, and that's why we do believe we could see that deflationary crash happening. Now, at the same time, we do have, for example, China telling their banks to not actually buy treasuries, in fact, sell treasuries, which obviously would lead to this downward trend actually continue. And now this is really the case that many people are currently talking about, the dollar debasement or the dollar devaluation actually to continue here, breaking through this long structural upward trend that we are seeing here at the DXY. And obviously, if that is about to happen, then you might see that natural gas could actually be able to not have a severe downturn, but just because of the reason that you do see that dollar devaluation. And so that would be a bull market here driven, that is fueled only by the dollar devaluation. And it might be easy to say that's a bull market, but obviously if you price something in something which is devalued at all times, if you value something that is diluted at all times, then obviously that price chart is not of real significance, right? And so we do believe that we do have big risks at this standpoint. We do have the debt problem in the US. And so obviously we might see a deflationary crash happen again here for the DXY. This could actually play out exactly as we've seen it happen here in history, here in 2008. We've seen that deflationary crash. Here in 2020, we have seen that deflationary crash. It was a little shorter here, but you generally do have this this relationship that whenever the dollar is actually rising, we have seen that big bear markets happen to natural gas. We might see it happen this time as well, but this time we might see even a bigger devaluation happening afterwards. Um, but obviously, that is all speculation. We can just take a look at history, and the last few times we've seen those crashes happen, that always happened to be a deflationary crash. And so this time, this could be happening quite similarly. We do believe we have still a lot of downside risk open here for natural gas, especially if you have a look at the structure here concerning volume delta and also the RSI. You have seen a lot of momentum to the downside happening, and we could also break under this lower channel here at natural gas. But whether this is actually about to continue is what we're about to see in the next few videos. And so if you don't want to miss them, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us for our work here on YouTube. Thanks for your support. See you the next time. Bye bye.